Welcome everyone to this edition of Lynk Speaker Session, where we will be having a discussion on how ESG investing could facilitate sustainable practices in the fashion industry and create a more circular economy. I'm Isabel Wong, Lynk's editorial lead and the host of this speaker series. Lynk Speaker Session is brought to you by Lynk Global, a technology platform that powers the new knowledge economy by unlocking insights and using technology to organize experts and their expertise. Lynk has been intelligently connecting decision makers and business leaders with over 780,000 experts across region and industries to help them make better informed decisions. This speaker session is also part of Lynk's commitment to supporting sustainable development and redress, Get Redressed month, which we are supporting for our second consecutive year at Lynk. The month-long campaign focuses on promoting the United Nations Sustainable Development Goal number 12, which is sustainable consumption and production patterns, which is an important commitment to us at Lynk. Please visit our LinkedIn event page to learn how you can also support this campaign too. But now let's go back to the discussion topics that we're gonna speak about today. The issues of overconsumption and environmental impacts from the fast fashion industry have actually garnered significant concerns from around the world over the past decade. Some quick figures for you all here. The fashion industry produces 10% of all humanity's carbon emissions and is the second largest consumer of the world's water supply, according to the World Economic Forum. If the industry continues on its current path, think tank New Standard Institute says the fashion industry could use up more than 26% of the total carbon budget by 2050 globally. Other than the environmental aspect, 67% of the world's clothing exports actually come from developing countries, which are actually the markets where labor and environmental laws and regulations can be lax, and the industry is often linked to issues such as child and forced labor. With that, the meaning of the sustainable fashion concept has also evolved over the past decade and years and moved way beyond just school projects using recycled materials to make new t-shirts or dress, but now moving on to having new technologies and policies implemented into the day-to-day operations of global fashion giants. Some would even say it's time for the world to embrace slow fashion. So which companies are actually leading the game of sustainable garment production and recycling? And what are some of the emerging technologies and innovations around the concept? And what does it all mean for costs and budgeting? But of course, just being sustainable in the production stage is not enough. There needs to be a thorough thinking process about how to make a business truly sustainable with respect to financial performance, environmental, and social impact. So with that, the speakers on today's panel here, they are going to give you insights about how to do fashion sustainably from the perspectives of an investor and a fashion insider. They are also going to talk about how the COVID-19 pandemic has changed ESG investing and the global fashion industry. Joining us today are Christina Dean, co-founder and CEO of Upcycled's fashion brand, The R Collective. She's also the founder and board chair of the NGO Redress. Among the awards and recognition Christina has received for her work over the years, Christina was named one of the UK's top 30 inspirational women by UK Vogue. The other speaker joining us today is Måns Carlsson, head of ESG research of Ausbil Investment Management, where he currently leads the ESG research team to take an active approach to engaging Australia's listed companies on ESG issues. Måns also chairs a subcommittee of the Human Rights Working Group of RIAA and was honoured in 2019 by Anti-Slavery Australia for his work in identifying risk of modern slavery in investment activities. To make this conversation truly interactive for everyone, we'll now run a poll to learn a bit more about what you guys think the global fashion industry will have to tackle in order to stay competitive and sustainable from the perspective of investment. Now let's bring up the poll. We've got the question of which of the following areas do you think are the biggest risks that could impact the investment appeal and sustainability of the global fashion industry. You've got the options of A, carbon impact, B, water pollution, C, plastic consumption, D, clothing disposal, E, underpaid workers, F, overuse of land, and G, biodiversity. For this poll, you can also select multiple options, because if you think there are 2 or 3 equally challenging and important risks and problems, you could also go ahead and select multiple of them. But we will share the poll results later on in the session, so you can also understand a little bit more about how your fellow audience members view the same issue. But before we begin the conversation, if you would like to submit any questions for Måns or Christina today, please feel free to use the Q&A function on Zoom, or if you're dialing in from your mobile, you can also send us your questions through email at insight@linkknowledge.com. We'll go through some of the questions that you have in our Q&A section later. But now let's bring in our speakers of the day, Christina and Måns. But first of all, let's bring in Christina, because if you actually look at the topics such as sustainable fashion in the fashion online, you will definitely see Christina's name or her NGO Redress mentioned somewhere. So there isn't a better person to talk about this topic than Christina herself. So Christina, welcome. Tell us about some of the recent developments in the global fashion industry on the sustainability front, especially in light of the global pandemic. Have you seen any encouraging innovations over the past year?
Absolutely. Thank you so much, Isabel. Yeah, I wouldn't know where to start to explain how many new innovations and startup ideas that and businesses that we've got to solve some of the biggest crises that are facing the fashion industry today. So for sure, I'd love to unpack that with Måns as well throughout the course of this panel. I might first briefly introduce why I'm so passionate about sustainable fashion, and to give a tiny bit of context to people who are listening about where I come from, literally. Some people may know I'm a qualified dentist, and I have a really strong belief and passion for public health, which is really how I got into sustainable fashion. I then was a journalist writing about the issues of environmental pollution and the impact that that has on public health. And that is how I became what is perhaps known as a sustainable fashion advocate. And I use this as an example to show that when we're looking at environmental pollution, we have to think about public health. Next slide, please. You've already, Isabel, introduced some of the really shocking data, and I'm so fascinated to see what all of you out there have clicked on the poll. We don't need to dwell too long on the negative environmental impacts, we've discussed a few of them already, but one that I'd like to focus on is 1 dumper truck of textiles is landfilled or incinerated every second globally. And this is something I think COVID is going to exacerbate. The reason I really wanted to enforce this slide, so enforce being a big word, I wanted to put the slide there is that this is really what we're up against, is a tremendous environmental impact, which has a social impact, of course, to do with health. And the next slide, please. So having worked in the trenches of textile waste for basically, I forget, 12, 13 years, I set up Redress, and thank you for introducing that already. And I also set up the R Collective, which is a sustainable fashion brand and waste management company. On the next slide, please. Now, the reason that I just briefly introduce myself to give you context out there is that I'm basically someone who has been part of the sustainable fashion development for 13, 14 years. And I've got the benefit of having spoken to multi-stakeholders as this ugly issue of sustainability has emerged. And as I speak to you today, I'm really just talking about my direct experience in the supply chain with a particular kind of APAC lens. I'm not a financial expert, but I need to become one, as you will soon find out. So if we could go to the next slide, please. Now, this is obviously the fashion industry. We're all consumers. It's a big industry. And in looking at the economic kind of impacts, fashion plus apparel, annual sort of revenues, roughly like 1.7 trillion. If you look at the total sort of GDP globally, the fashion industry is contributing to, it's around 2 to 2.5% of global GDP. And supposedly, and I find this really hard to believe, but 1 in 6 people globally are linked to this industry. We're seeing the fashion industry seismically change in terms of overproduction and overconsumption. Production of apparel has doubled from the year 2000 to 2017. And this is set to worsen in the future. estimates suggest that by 2030, we're going to have a 63% increase in global consumption. So surprise, surprise, as we look to the future, we're going to see a worsening in terms of production and consumption, and also all those environmental data and stats that I just gave you, all worsening. Waste particularly, which is obviously where I live, is set to increase by 20% between now and 2030. So, you know, the issue is that we've got a horrible issue here. And the good news in some ways you could say is that the fashion industry is really, really trying to change. We're seeing, you know, obviously seismic change from consumer awareness, and that's, I don't care what poll you look at, I don't care which survey you look at, we're seeing that consumers around the world are certainly getting much more engaged in this. We're also seeing investors becoming, you know, much more engaged, perhaps still scratching their heads with confusion about what ESG and what social impact kind of investing actually means. But and I know Måns can speak much better than I on this, but I've seen in my world of stakeholder discussion, investors absolutely asking much more ruthless questions. So the good news is we're seeing that the industry is changing, and this is kind of evident of, if you look at all the big global multinationals, whether they're groups or whether they're individual fashion businesses. We've got a sizable lion's share of the fashion industry signing up to all of these associations and coalitions and these voluntary groups. The notable ones being Fashion Pact, the United Nations FCCC Climate Change Charter, the Sustainable Apparel Coalition, and the Global Fashion Agenda. And there are more and more voluntary kind of sign up. So that is kind of good news. You could say fabulous, isn't it great? All these brands and businesses are signing up to do the right thing. The bad news, of course, is that not all businesses are signing up. And broadly speaking, and I can't vouch for the, I can't prove that this is true, but a 2018 Boston consultancy report suggests that around a third of companies have yet to do absolutely anything. A third of fashion companies in relation to sustainability. So we can't live in a bubble thinking everybody's moving in the right direction, because it's definitely not true. So when we look at the businesses that are already developing and putting a lot of money into sort of R&D and into cleaning up their supply chains, etc., one of the big challenges that a lot of these businesses are reporting is that they've kind of done all that they can do to clean up energy efficiency, or, you know, trying to source more sustainable raw materials. And the big kind of elephant in the room is that in order for these big businesses to really ramp up their carbon savings, or their, you know, lessening their impact on oceans, water, or biodiversity, they need massive amounts of technology innovation and just business supply chain innovation to really ramp up improvements. And that's what we're seeing a lack of at the moment. You know, the fashion industry says, oh, you know, we're so creative, we're so innovative and all of that. But actually the fashion industry in terms of innovation is actually lagging behind the clean energy sector, or the, you know, automobile sector, and even food. So I think I want to salute the greatness of the developments, but also say, quite honestly, it's happening too slowly. So there's definitely a good reason why we're all here about to talk further about money. If you just go to the next slide, please. This is a slide that everybody ought to recognize. Globally, of course, these are the Sustainable Development Goals. Awareness of the SDGs is pretty low, actually, globally. And obviously, this is something that these need to be almost etched into our mind. And supposedly achieving these SDGs per year requires a 5 to 7 trillion USD investment. And why I've put this slide here is because, look, SDGs are very complicated. You go into one of, like, let's just say no poverty, and you drill down, drill down, drill down. These are radically complicated issues that we're dealing with. But the good news is, and this is what I hold on to almost every day, is that the fashion industry can positively impact 11 out of these 17 SDGs. And so the beauty of the fashion industry is, whilst it is really, really polluting and it has huge violations in sort of social issues, but the beauty actually is that we can positively influence 11 out of these 17. And so investment into sustainable fashion innovations actually has an outsized impact in terms of SDG attainment, which is fantastic news. We need to see more money pouring into the fashion industry to push these sustainable sort of innovations, etc., and to help the big players to really achieve their targets. So that's all the good news, but, you know, we're not actually obviously seeing enough money going into these sectors of sustainable fashion. So if we can go to the next slide, please. COVID has been brought up already. Isabel mentioned it. You know, how is COVID really changing the sector? Now, this is a whole 2-hour presentation in itself. Obviously, I'm not going to do that, but I think the curse of COVID has obviously been the economic complete catastrophe. And that's obviously mainly felt at the most marginalized people, the garment workers and people working deeper in the supply chain. So that's an absolute catastrophe that's increasing poverty. But so in recognizing that, I also want to say something that might sound a bit crazy to people out there, but really COVID has actually been a little bit of a blessing in some ways, because it's really accentuated all of the, I can't say it's been a blessing, it's not, but there is a silver lining, which is that what COVID has really done is it's brought out all of the problems of the fashion industry for plain view. We had a sudden drop in consumption. We've got businesses going bust. We've got materials stranded all over the world, and in DCs and even on ships. I mean, I expect they've got off the ships now. We've got waste absolutely everywhere, if I dare say that. We've seen enormous disruption to supply chains. So, of course, there is a silver lining. And as the Copenhagen Fashion Summit, which took place last week, said, and I really love this, and it in line. So I'm sure we can explore COVID a little bit more. So I just want to say, with the pain that COVID is bringing to all of us on a personal, professional level and economic level, there is this silver lining that I do genuinely hope we can explore as we emerge economically out of this sector, this problem, that we can implement better systems as we go forward. Next slide, please. Okay, so this is a very jammed rail of clothes, and the reason I picked this image is it sort of represents to me all of the startup innovation businesses that are sort of they're all on the rail trying to bustle their way through to break through onto the industry. And as we, linking this to COVID, if you think we're in this absolute chaotic crisis point where the industry, even before COVID, was screaming for innovation, it's screaming even louder now because we've got broken supply chains, we've got broken business models, and this is where these startups, they need to go now. It's an exciting time to be a startup, and it's also a really exciting time, I think, to be an investor if you're brave enough and if you have enough insight to look into this sector. So in terms of the sustainable fashion innovation startups, I mean, broadly speaking, they're happening across the entire supply chain, and I'll show you exactly where in a moment. But the point to really put here is that in terms of putting a dollar sign on the investment that we need in sustainable fashion investment, it's estimated that we need 20 billion to 30 billion annual financing to commercialize some of these disruptive solutions that we're seeing to fashion. So we need 20 billion to 30 billion per year going into sustainable fashion solutions, and we're definitely not seeing that right now. So, and this is where I have to say I'm rather frustrated that we have already seen a lot of investment into cars, technology, cars, food, energy sector, and it's not yet coming into the fashion supply chain where we urgently need it. So where should the money go? If you can go to the next slide, please. I was fascinated to see this graph in a Boston Consultancy Group report with Fashion for Good. And it's looking at the total investment that needs to go into sustainable fashion solution. And it's broken down within the supply chain. So from raw materials, processing, cut, make, trim, retail and end use, you can see them as they go up. And it's clearly divided into percentages of where that 20 to 30 billion investment needs to go. And why I have to say I love this graph is that it's quite interesting that if you look at the two largest or significant areas are raw material investment and end of use investment. That's really where a lot of this supposed investment needs to go to. Now, what I want people to imagine is if we take that straight graph, I want you to, in your mind, twist it, bend it in your mind, and basically it kind of turns into a circular economy. Where we need to see the investment going is raw material sourcing and end of use. We need to connect these two areas by connecting the circular economy. So if you go to the next slide, this is the most infantile, babyish version of the circular economy. And I know it's almost a joke how babyish this is, but I just wanted to point out, we know that the linear economy is absolutely a crisis environmentally and also economically and socially. So it's quite obvious. Linear is make, take, and use. And then the circular economy is a completely different system where all materials are obviously reused and circulated back within the industry. So I wanted to leave on perhaps a statement and then a question, really. You know, again, to sum up in a way, I've been living in the trenches of waste, the issue, the textile waste, environmental pollution, the effects that it has on people's health. I've lived, I've really sort of fantasized about these sustainable development goals. How do we get there? We know it needs a lot of investment. We know that the fashion industry can actually achieve these sustainable development goals. We know that there's capital out there. We know that there's an increase in ESG investment and interest in impact investing. We know all of that. But it's not coming into the fashion industry. And we also know that it needs to go into raw materials and it needs to go into end of life. So we have to make the circular fashion industry come alive, and we need money to go into it. And to leave you on a statistic, which I find staggering. It's an Ellen MacArthur report finding this, that supposedly we're losing 500 billion USD annually because of clothing utilization and the look of textile recycling. And so what I'm saying is that there is money to be made surely in cleaning up this Fashion Industries Act. So really, where's the money, man? So have you got any?
All right, so yeah, thank you. Thanks, Christina. So for those who don't know much about Ausbil, we're an Australian-based fund manager with about $12 billion in assets under management. Our clients include retail and institutional investors. And we're part owned by New York Life, and we also are part owned by our own employees. So we invest in listed companies, from microcaps to blue chip companies, and we mainly invest in Australian companies, but we also do have some funds that invest globally as well. And I should say up front that we are not investing in startups without current earnings. The majority of our funds under management is in large listed companies. So that's a perspective I will come from today in my presentation. And one thing that we take pride in is that we integrate environmental, social, and governance, or ESG, in our investment decisions, and we do proprietary ESG research. So as an ESG researcher, I cover all sorts of sectors and different ESG issues, from corporate governance to climate change to human rights in the supply chain, and obviously the fashion industry is one of them. And the main focus for me has always been the S in ESG, social issues like labor rights and modern slavery and supply chain, but obviously also a wide range of environmental issues. So if you go to the next slide, please. So I just want to touch on a couple of points today. First, what is the case for sustainable investments? And then second, how can ESG integration work in practice? And then finally, what are the risks and opportunities, particularly in fashion from an ESG perspective? So if you go to the next slide, please. But I'd like to start off by looking at the impacts from COVID-19. And like Christina said, some of the bad news that really has been the increase in the vulnerability and exploitation of workers in the supply chain. There have also been fears that COVID-19 would derail or slow down the corporate sustainability agenda. But I must say, based on conversations I've had with companies across a wide range of industries, that doesn't seem to be the case, and that's the good news. So we speak to a number of companies across different industries, and none of those companies I've spoken to recently have announced any delays in the areas of sustainability. So many of the sustainability drivers that were there before COVID are still there today. And some companies even say they think the sustainability agenda has actually accelerated in COVID, which is interesting. So for instance, packaging companies are facing increased sustainability requirements from their customers, and that ultimately must come from increased consumer demand. We also see it from where we sit as investors. We're seeing increased interest and demand for our sustainable fund, and our sustainable fund has been one of the best performing funds this year during the pandemic, and we're not the only ones. I think across the industry, a lot of the sustainable funds are actually doing really well. And there's also more interest in the UN SDGs that Christina mentioned before, and I'll touch on that later on. If you go to the next slide, please. It just takes me to my first point. What is the case for sustainable investment? And sometimes I think a picture says more than 1,000 words. And I think this chart is very telling. So this is the funds under management by signatories to something called the PRI, or the Principles for Responsible Investments, which is the biggest industry body for the responsible investment industry globally. So funds under management has obviously increased a lot, as you can see there. As of January this year, funds under management by signatories amounted to over $90 trillion US dollars. And that can be compared to about 20 trillion a decade before. So signatories then commit to 6 principles, including to be active owners and engage with companies in these issues, and report on ESG issues and integrate ESG in the investment process. So you go to the next slide, please. So I started out as a financial analyst, and I've been in ESG research for most of my career. And I've also seen a shift away from ethical investments to sustainable investments. And there's been a bit of an evolution there where investors used to invest with their hearts and simply avoid certain companies. And those investors were quite happy to forfeit returns as long as they invested in the companies they felt were doing the right thing. But if you fast forward to today, I think increasingly investors use ESG research for different reasons. And that's to make better informed investment decisions and ultimately drive better returns. And also in terms of trends, I'd say there's a trend of investors wanting to see an impact from an investment. So impact investing is a growing field within responsible investments. And on that note, another important aspect for investors is what Christina mentioned before, the UN SDGs. So many of those high-level goals to be achieved by 2030 are very relevant for the corporate sector, including the fashion sector. And like a goal like eradicating slavery by 2030 is an incredibly ambitious goal, but there's also goals related to climate change, gender equality, recycling, and environmental pollution. And many of those issues obviously apply to the fashion industry, but they're also relevant for investors because the PRI, as I mentioned before, they've supported the UN SDGs, which means investors who are signatories of the PRI will likely be very focused on these areas as well. So that's the big picture for the case for sustainability from an investor focused on listed companies. But if we go to the next slide, please. I'll just explain a bit more where I'm coming from as an investor in listed companies. Because historically, if you look at what drives company value, the majority of that used to come from tangible assets. But over time, investors seem to have valued something else more than just the tangible assets. And the proportion of company value that comes from intangible drivers has increased over time. And today, the majority of value actually comes from intangible drivers. And you might ask yourself, what are these intangible drivers? Well, if you look at a company in the fashion industry, for instance, I would include things like corporate governance, but also corporate culture, supplier relationships, of course, customer relationships, brand, staff engagement, and more. And you can broadly divide that into E, S, and G factors. So therefore, I think it makes perfect sense for investors to understand how companies are managing those. That's another driver behind the surge in responsible investments. And I would say it makes perfect sense, particularly now, because we are facing more change at a very rapid pace in the world than ever before. And I also see a company's ESG credentials as a bit of a proxy for the ability to adapt to a changing world. And the fashion industry is no exception there. And one of the key changes, of course, or challenges, as I say, is the inevitable decarbonization of the economy to meet the Paris Agreement. And that will be driven by policy change, but it will also be driven by technology change and changes to private capital flows. And I think that's almost as important. And the war on waste is also scaling up. So if you go to the next slide, please. So I think it's fair to say that historically, most investors in ESG probably have focused on the E in ESG, particularly climate change. But there's been a number of catalysts in recent years for increased interest in the S of ESG, particularly on the regulatory side of things. Obviously, there was a bit of increase in interest from the Rana Plaza collapse in 2013, but I think in recent years, it's really the interest in S has really dialed up. So there's more interest in social factors. So the UK introduced the Modern Slavery Act a few years ago, and while the response to that, I think it's been quite lukewarm. There's been other initiatives in Europe as well, like in France, for instance, but also where I'm from in Australia, so the Australian Modern Slavery Act. And I just want to spend a bit of time on this because I think this could become a bit of a blueprint for how other countries might try to tackle the issue of modern slavery in the future. So modern slavery, of course, refers to bonded labor, forced labor, trafficking, and the worst kinds of child labor, etc. And prior to COVID-19, it was estimated that there were about 40 million people being in modern slavery conditions around the world. I think that that number is probably much, much higher today than there was before COVID. And the biggest hotspots for modern slavery are in agriculture, electronics, construction, fishing, mining, but also the fashion industry. There's a lot of issues in the supply chain, as we know. And the Australian Modern Slavery Act is, like its predecessor in the UK, a transparency act. So it requires companies to report on the risks of slavery in the operations supply chain with a view to create a race to the top. And obviously, reporting itself is not going to solve slavery, but the Australian Act has more teeth than the one in the UK, I think. So first of all, the Australian government needs to report itself, and that will have ripple effects because that's the single biggest procurer in this country. And secondly, in the UK, as we've seen, a lot of the statements that have been quite, well, they haven't been very good, to say the least. They've been quite empty, and it doesn't take much to be legally compliant. You just need to write up a statement, have a director signing it, and then put it on your website. But in contrast, in Australia, organizations need to address 7 mandatory reporting requirements. And also they need to submit this statement to the Australian government in a central depository. And that's going to be public. So consumers, media, and NGOs will find it easier to find these statements, compare them, scrutinize them, etc., which can lead to big brand risk for companies. And third, which is particularly important for investors, is that the Modern Slavery Act in Australia applies to us too. So it applies to our portfolios. So we as an organization need to be aware of the risks of slavery in our portfolios. And meaning the companies we invest in. So I've been part of a consultation with the government about this for quite some time, and I'm also advising the government here currently on how to effectively implement the Act. And I think investors have a big role to play in terms of combating slavery, mainly through engaging with companies we invest in and encouraging them to adopt what we think is best practice. So while the legislation focuses on modern slavery per se, I think it's important to note that modern slavery doesn't just magically appear out of thin air. Sometimes there's a very fine line between what actually is modern slavery by definition and what is really poor labor practices. So I think investors need to take a wider view on this. In the future, fashion companies will be facing more and more questions from investors about labor rights. And that's not just here in Australia. I think it's going to be around the world, because I think other countries will eventually follow Australia's lead. So if we go to the next slide, please. So we've established that investors increasingly integrate ESG, but how is that done in practice? Well, there's different ways, of course. And I think it also is important to recognize that ESG integration means different things depending on who you speak to. But for us, it means better informed investment decisions, and also means engagement on ESG issues with the companies we invest in. So this is our investment process. We have a 4-stage process, and we apply a top-down and bottom-up investment approach. It starts with macroeconomic analysis, and then sectoral analysis, and then stock selection, portfolio construction. So ESG can be a part of every single stage there, but the bulk of the ESG is really done in the stock selection phase, which means we need to evaluate every company on their ESG credentials. So on the next slide, please. To integrate ESG in practice and properly, I think it needs to be tied to investment philosophy, which is, in our case, that earnings revisions drive share prices, and we have a preference for companies that have sustainable earnings and companies with quality management. So with that, we think there's a natural link to ESG and many of the topics we've talked about so far today. So my team rates and scores companies on ESG, and we also produce company reports spelling out what we think are the key challenges and also opportunities from an ESG perspective. And then the analysts are then taking that information, and that's part of their final investment recommendation. And other things investors might assign, some investors might assign a certain weight to ESG in their investment process, and there's very different ways you can do that. So this is just how we do it. We also pay attention to companies' trajectory on ESG issues. So from an ESG perspective, integration doesn't necessarily mean that you only invest in companies with the best ESG profiles, because you might actually end up with a portfolio of very expensive stocks. Because over time, we think companies with a good ESG profile normally has premium valuation. So from our perspective, from an alpha perspective, it makes sense to invest in companies that are improving on ESG. And if we go to the next slide, please, just coming back to the philosophy. at the heart of it, it comes down to earning sustainability. And I think many investors would agree with that. So if a company or a business model relies on underpaid workers in the supply chain, weak regulation, underpriced pollution, or even illegal activities like slavery, well, current earnings are not going to be sustainable in the long term. And that presents a number of challenges for the fashion industry. So if the industry doesn't cover its true social and environmental costs, well, how sustainable is that business model over time? Where in a world where consumers and governments are increasingly focused on the war on waste, fair labor rights, water shortages, climate change, and other ESG issues. Some of the big challenges we see, of course, relate to water use, hazardous chemicals, the short life cycle of a product, use of pesticides in cotton production, as well as labor rights, etc. And I find it interesting that people still refer to Nike when they hear the word sweatshop, even though that relates to issues that happened a long time ago. And we've also seen what happens to the share price of Boohoo in the UK when they face negative press about allegations of underpaid workers this year. So what I'm saying is that investors, I think an issue like modern slavery and labor rights, and a lot of other ESG issues too, they're no longer in the domain of ethical issues. It's ultimately tied to brand risk, which can be very real, and earning sustainability. Another thing we look at from an investor perspective is how consumer price index, or CPI, that's steadily increased over time. But inflation in fashion hasn't really kept pace, and that's been a long case for a long time. So how can that be sustained over time? And that's just the labor cost. Then you also have the environmental impact, and that needs to be paid for by someone at some point along the value chain too. So China has for a long time been the engine for textile manufacturing, and while cutting and sewing is done in many countries, the textiles themselves are often imported from China. So if China is becoming really serious about tackling its environmental issues, what will that do to the cost of material sourced from China? And also, how will that feed down the value chain and ultimately onto consumer prices? So the question is, will that cost be absorbed by the garment factories actually who are sourcing the textiles? Or will they pass it on, and will it be absorbed by the brand companies, or maybe both? Will that lead to increased exploitation of labor in other areas of the supply chain? I guess time will tell. And if people are to be paid a living wage, well, what does it mean for the ultimate cost? And automation and productivity, I think that they can mitigate some of these issues to some extent, but it's not going to magically solve all problems. The opportunities, however, are those who can break through those challenges, and businesses that can be part of a circular economy in a world faced with resources constraints, regulatory action on climate change, and increased focus on labor rights. And I'm not professing to be an expert at emerging technologies in fashion, but as a generalist and as an investor, it's clear that sustainability issues for the fashion industries are very well documented, and something needs to change. I think Christina put it really well when she said how much money needs to be invested in this. So what is needed is big investment into new materials, processes, and business model. And that's a challenge from here. And I think transparency will be key. So reporting on ESG issues will be increasingly important in the future to attract capital. And on this slide too, I'm talking a bit about engagement, because I think that's a really important role we play as investors. So the rationale for us to engage with companies, of course, is that we want to protect investor capital and also make better informed investment decisions. And in general, we and many other investors, I think we prefer engagement over divestments. And I think many, because simply divesting companies in shares in a company that's exposed an issue, that can actually lead to unintended consequences sometimes. In my job, I've been fortunate enough to visit garment factories in China, Cambodia, Bangladesh, etc. And those field trips are very important for an investor, because not only do you get to see workers and speak to them in real life, but you can also learn from those trips in terms of what's best practice. So by speaking to leaders on responsible sourcing, speaking to NGOs, unions, etc., you also get an idea of the challenges and complexities faced. And then you can take that information with you when you then engage with companies that you hold. And ultimately, the way we see it, companies that know their supply chains really well, have healthy and strong partnerships with suppliers, well, they have less risk of labor rights issues in the supply chain. And the same goes for those who collaborate with NGOs and adopt a pricing model that actually tries to capture a living wage through the supply chain. Another thing we often talk to companies about is just to look at conflicts of interest. So a lot of companies, of course, have a responsible sourcing policy. They have a responsible sourcing team, but sometimes that's not really aligned with the way the procurement team works. So you might have a situation which is very common when I speak to suppliers in Southeast Asia, that first the responsible sourcing team arrives. They find a number of issues that the supplier has to rectify. The supplier then, or the factory then, invests money into putting in fire exits and raising wages or whatever it might be, just to make sure they comply with ethical sourcing standard, and that costs money. And then a month later, the procurement team arrives, and they have a different agenda because they're only incentivized on price. So they try to negotiate at a different price or lower price, and if they can't get that, they go somewhere else. So often then the factory owner takes the order, but then subcontracts that order somewhere else, typically to a place where factory conditions are much worse. And that issue is also coupled, I think, with a very naive view that social audits will automatically solve all the issues. And if that was the case, something like slavery would have been solved many years ago. So we think there's a lot of things companies can do, and we engage very heavily with companies on that. And a lot of other investors are taking more and more of an active approach. And I think that's something companies will see more and more of going forward. So investors are getting more engaged in these topics. But in the interest of time, I might just leave it there for now. Thank you.
Thanks both. Thanks, Christina and Måns, for the very well-researched overviews that you guys just gave us. But now, before we jump back to some of the Q&A questions that we've got from our audience members, I would like to check out the results of the poll that we did earlier. Now, we got the results showing up on screen, and let's see. Actually, very interesting. 64% of our audience members think clothing disposal is actually one of the biggest risks that could potentially impact investment appeal of the fashion industry, which I definitely have a question prepared for Christina to answer later. But then some other risks that our audience members have chosen are like carbon impact, water pollution, plastic consumption, while somehow 0% of them chose overuse of land, which is, I mean, this is a very interesting set of results. But now, before we dive deeper into any questions that we are receiving from our audience members, I would like to go back to the concept of circular economy a little bit. Because Christina, as you wrapped up your presentation earlier, you kind of introduced the idea of that a little bit, but then I would like to have a forward-looking view on that in terms of what's the outlook for a circular economy in the fashion industry and what needs to be done to actually achieve that.
Mm-hmm. Okay, so we have a massive raw material sourcing crisis in terms of providing enough sustainable raw materials to feed this industry. And we also have an end-of-life crisis. We have too many post-consumer clothes and we have too many waste materials from the industry itself. So we need to bridge that. And as I explained, like really, we need to crunch these two problems and connect them. Now, it's a massive problem. The global economy only runs at a 9% circular. The fashion industry is currently about 1% circular. Clothes, unwanted clothes becoming clothes again. It's absolutely diabolically pathetic as far as I'm concerned. The massive complexity around the circular economy is that it's very multifaceted. It requires multiple collaboration across different types of businesses, from collection, reverse logistics, sorting, technology to actually recycle this. So you need to bring together multiple businesses to make the magic happen. And that actually is one of the biggest problems, I believe, in the investment into the circular economy, because many investors, and I've seen a question somewhere in this chat, many investors might see the interest in the circular economy, but they need to invest into multiple different companies to make it happen. And you can't just have a collection infrastructure up in place, because we need the technology to be able to recycle it. So in the future, I wholeheartedly believe, and the industry itself is absolutely hell-bent on unlocking the environmental, social, and economic benefit of the circular economy. But the elephant in the room is that it just requires tremendous improvements in multiple sectors. And we're in the dark ages to seeing this happen. A lot of focus is really at the moment looking on recycled technology, which is absolutely key. And there is a lot of money going into businesses that are looking at chemical recycling, etc., to bring these fibers back into use. But many of the businesses that are out there are still in development stage, and we're not at an industrial sort of scalable capacity at the moment. So I'm saying that it's challenging, but I'm saying that we have to do it. And I'm definitely saying that it must be done in order to supply raw material to the fashion industry so that we don't continue to source virgin materials. I'm really shocked that no one selected land use as a threat to the future of the fashion industry, because with the projected growth of the fashion industry, the industry needs 35% more land by, I think, 2030 off the top of my head. And I'm really surprised no one, this is not a rap on the knuckle, people, but I'm surprised that no one selected that. Land use is a massive issue when we look at, you know, the needs of our growing population for land, and the fashion industry is using a lot of it.
Yeah, Måns, do you have anything to add in regards to circular economy?
No, I think I echo a lot of the points Christina has made, and I was also surprised about the lack of focus on land use, because if I look at cotton, for instance, I mean that's competing directly with food consumption for a growing population. It's incredibly water intensive, and you know, and also if you want to stop climate change, we can't really cut down forests to use that for agricultural lands. Yeah, unfortunately, there's a lot of challenges. I mean, I've spoken to a number of companies about the circular economy, and when I say companies, I mean companies from a broad range of industries. And I'd say that the most challenging part of the circular economy probably is circular fashion. Even like a couple of days ago, I had a chat to well, how to put it, like a conglomerate company in Australia which invests in pretty much everything. They got a bit of retail, they got a bit of industrial, they got yeah, just various different businesses that they have in their portfolio. And we talked about their circular economy, and that was saying, well, you know, we've done a lot of stuff in other parts of the business, but circular fashion, that's just really hard. And it comes down to many of the things that Christina's already talked about. And there is that lack of technology or innovation that's really, really needed. So they are teaming up with, you know, with companies they think are experts. So a lot of the smaller companies are then helping the big companies. And I think that's probably how I see this develop. You know, there aren't really many listed companies that have the technology solutions available, not in my space at least. But there are many smaller companies and startup companies, etc., and they are then collaborating directly with large companies, because the big companies understand the issues. There's no doubt about that. But they don't have the solutions themselves, and they need people to help them.
Mm-hmm. Yeah, when you were during your presentation, Måns, you mentioned the example of Boohoo. Of course, Boohoo was in the news again this week. I would like that example essentially kind of reminded us that it's often a challenge for ESG investors and firms to identify areas of risk and non-compliance within companies that they're looking to invest in. So are there any approaches that these investors could take to try to minimize that risk?
Yeah, I mean, yeah, that is a challenge. I think the first thing I would say to that is, if you only rely on company reporting, I think you're fooling yourself. Like, I think you need to go beyond that. Obviously, many investors want to do that anyway, and we try to be one step ahead all the time. We are bombarded with sustainability reports and sustainability data. I don't think a lot of that is necessarily material to us. I think we need to dig a bit deeper. And we do. So we often look at things like, say, I don't know how familiar you are with this, but Glassdoor, which is how to describe it, like a TripAdvisor, but for staff, I guess. So you can see what it's like to work in a company, what they think of management. And obviously you have to be a bit selective in terms of what you read there, because some of the comments are just very, very abusive about the management. Others are very complimentary, but there's also a lot of granular comments where they talk about the cultural concerns they might have. It could be about safety, it could be about how they treat suppliers, etc., etc. So there are ways for this. This is publicly available information too, so there's no inside information. So there are ways for investors to find that information. And I also find going on field trips, you get a good feel for how things are really working in practice, and by speaking to suppliers, etc. But I think that's always the key challenge. We've seen a lot of corporate scandals in recent years where investors have been very surprised. Even companies have had like high ESG ratings by external service providers and still got in trouble. So that is a challenge. I think that the only thing I would say is that we just need to do our own research and try to not look at what companies say only, but actually speak to as many stakeholders as possible. So in our research, for instance, we speak to NGOs, we speak to unions, and it's just good to get their perspective on things as well.
Mm-hmm.
Can I
Yeah,
share something, Isabel? Do you mind if I just jump in with something I just wanted to share, which, Måns, you know, obviously you're highly engaged in ESG, and it's incredibly exciting to hear that. And, you know, again, often we can live in a bubble thinking that everybody's into this, but I wanted to share that I often look for sources around the UBS website and their ESG investment data. And I saw on their website that supposedly fewer than 10% of financial advisors are highly interested in ESG, and 60% have got little or no interest. And so if we're talking about tipping, you know, the industry, putting more capital into these difficult, complex areas of innovation and areas that will deliver our SDGs, the fact that we've only got 10% of financial advisors being highly interested in ESG, I mean, we need more. It is a massive area and sector that we need everybody to be speaking like Måns. Because, and one final point, and this is a question on the circular economy, it is unbelievably complicated. And one of the big challenges that businesses operating in the circular fashion economy have in terms of raising investment is that investors don't understand what they're doing. So we need investors to become highly more educated, not just on ESG reporting and what it actually means, but also in the circular economy. We need to see much more sort of academic rigmarole from investors in this area. I don't know if that's just a fair comment to make. I'm sorry if people are listening. I don't want to sound like I'm bossy. We need more engagement.
Yeah, well, I think that's a fair point, Christina, about capacity building, because yeah, like there are complex issues and there's complex technologies. And I think because of the challenges that sector has been facing for many years, it hasn't necessarily been, well, to pardon the pun, but like a sector in vogue, if you know what I mean. Like I think a lot of investors have actually stayed away from the fashion industry because they don't see the same returns. They don't see that, they see the challenges and maybe they don't see the opportunities. And I think, yeah, investors need to be educated about that. And I think as these emerging technologies develop, I think that there might be a bit of a renaissance for the fashion industry in that sense. If these solutions are holistic and they can actually solve some of the issues.
Mm-hmm. Yeah, as you just pointed out, Christina, because well, I mean, as you mentioned, investors also need to be educated on the latest trends and how to approach with their investment because times are changing. So that brings me to ask maybe you both or specifically Måns the question. Traditionally, some key questions that are often discussed or looked at by investors would be like how the financial performance of the target companies that they might be looking to invest in. But then are there any questions that investors these days should be asking since times are actually changing?
I think there's a lot of questions we should be asking. I mean, ultimately, what we saw in COVID-19 as well was how some companies did not really have enough diversification in the supply chain. In actual fact, I think some companies didn't really understand their supply chains, and then they got stranded and they couldn't get the goods. So it's one thing if management doesn't know exactly how much the workers in the supply factory get paid, but I think as an investor you get very nervous when companies can't give you a proper answer to ESG questions because they can point to a bigger issue. I mean, yeah, we ask a lot of questions from companies, both on the environment and social issues. I think some of the key issues will be to say, well, these are the challenges that are presented to the fashion industry. So how do you see them, and how are you going to mitigate those? We can talk about the carbon impact. We can talk about modern slavery and underpaid workers in the supply chain. There's a lot of tough questions to be asked, I think. And in my experience, I think investors are increasingly asking those questions.
I just wanted to add one thing, if I may. Also, you used the word diversification on supply chain, and I'd also like to add a diversification in the fiber basket of sourcing, because, you know, if anyone's speaking to a company and they haven't like looked at risk management on their sourcing of fibers and their diversification, as I say, of the basket, so that they've got more sustainable raw materials, they're considering their risk to sort of China, increases in, you know, water pricing. You know, Måns, you mentioned the textile production obviously being pretty much lion's share being China, and garment manufacturing being ex-China. So my point to anybody listening that's speaking to fashion companies is, what is their raw material sourcing strategy going forward?
Yes.
Yeah.
Yes, because it's got to come from somewhere, right? And if China's really cracking down on the environmental laws, etc., with the water 10, air 10, and all those things, I'm not sure who's got the capacity to replicate what China's done. And I don't think textiles manufacturing is necessarily in China's long-term best interest either, because there's low-skill manufacturing. Yeah, there's a lot of issues there. And then also, I mean, a current issue, of course, is what's happening in the Xinjiang region in China, and the forced labor there, and whether that's going to have political ramifications globally as well. We know that forced labor is not only used in that province, but it's also forced labor is also taken out of that region and put in other parts of China. So that's a huge issue. And Xinjiang accounts for something like 20% of the global cotton production. So, you know, there's a lot of cotton in the world that might be tainted by forced labor. And the problem there, of course, is transparency, because I remember back in the day when companies were saying no to Uzbekistani cotton because of similar issues in Uzbekistan. It was very hard for companies to actually prove that they weren't sourcing from there because of the mixing of the fiber along the supply chain. It's very hard to get that transparency and traceability. Yeah, sorry for adding another issue to the table.
Yeah, here's a question for you, Christina, because of course, Måns just kind of briefly mentions about the issue of transparency, but then we've seen a lot of fashion companies in France launching some of the collections or projects that are branded as sustainable these days. How can consumers really recognize these efforts are truly sustainable? And of course, there's also the economic concerns of fashion also having these so-called sustainable solutions, such as buying high quality goods to last longer, but some are actually saying they are not necessarily accessible to people with less means. So like, how to make sustainable fashion accessible and truly sustainable for everyone?
Wow, there's a lot of questions there. So let me just start with price point, if I may. There is a big argument, of course, that sustainable fashion is more expensive, and quite honestly, it is. You know, if you're just looking at compliance, if we're going to implement all of these additional compliance costs on supply chain, it has to go into the product, basically, as far as I'm concerned. So sustainable fashion should be more expensive. And the elephant in the room, yet another one, is that really, if you look at total average household expenditure on clothes, it's been decreasing over the last 100 years to, let's just say, 3% of American, roughly. And in that same period of time, we have bought a ridiculous increase in amount of clothes. The price point has come down significantly. Our clothes are incredibly cheap, and no one wants to be told that they have to spend more money on clothes. Nobody wants to be told that actually the clothes cannot get any cheaper. And I just want to say one thing on COVID, which is fascinating, is like, and Måns, you will know this better than me, but can fast fashion produce at the price point from a labor perspective anymore? Because so many factories are running at social distancing, and so they've got limited efficiency. They're not able to produce the clothes at that cheap price point. So have we got to the bottom of the gutter in terms of price point? I really do hope so. So to answer your question, consumers have to be taught and trained that they have to spend more on clothes. And if we get more regulation and we get more cost on the supply chain, clothes have to come up in price. And I do not believe, and this is not a very popular perspective here that I'm about to give you, but I actually think that consumers can spend more money on clothes. I know many people live in poverty. Please forgive me for being so rude here, but if you just look at the last 100 years of total average household expenditure, we spend less and less on clothes. Now, the only way, if people don't, no one wants to spend money. Everyone seems to be incredibly tight. I understand that. So no one wants to spend more on their clothes. So the only real way to satisfy their demand and their needs is to create a circular economy where we're taking these waste materials, putting them back into fashion, and then we can pump out cheap clothes, which are quite sustainable because they're based on a circular economy. Now, one quick thing on this, the beauty of the circular economy is obviously resource management in terms of these raw materials, but the beauty of the circular economy is job creation. And so it ought to be possible that when we can get the circular economy working, people can buy cheap clothes if that's what they want to do, and please don't shoot me for saying that, but we can also give people jobs. We need the jobs. It's very important. The circular economy can actually maintain livelihoods. And so to answer your question, I'm so sorry there's not a straight answer, but ultimately the biggest solution, and I've read this and I think it's so great, the biggest solution in the whole sustainable fashion agenda is to train American and European consumers to spend a bit more on their clothes.
Right. Yeah, I'm afraid we'll have to leave it there, but I just felt like the discussion just got started. Well, thanks, Christina and Måns, for joining us today. That was Christina Dean, founder and board chair of Redress, and Måns Carlsson, head of ESG research of Ausbil Investment Management. Well, I see a lot of questions coming through the Q&A boxes. So if you guys still have any questions that you would like to ask Christina or Måns, please feel free to reach out to us at insights@linkknowledge.com. So we will try our best to send some questions to Christina and Måns if you would like to have the answers. But this is it for this edition of Lynk Speaker Session. Thanks all for joining us. Lynk users will be able to catch up on all our previous conversations on demand in our Lynk Answers platform. You just have to log into your Lynk Answers account and go to the Lynk Insights section, and you'll be able to see all the videos. But we've got plenty more to come on the way. On November 5th, Thursday morning here in Asia, we'll be speaking with former US Consul General to Hong Kong and Macau, Kat Tong, to get an immediate analysis on the initial results from the US presidential election and discuss the near-term implications for Asian investors. So stay tuned for announcements as for how you can secure your spot for our next session on our social media pages. We're on LinkedIn, Instagram, Facebook, and Twitter. Thank you for tuning in.